Now let's look at how markets opened this morning. Asian stocks extended their gains to above a two-year high, tracking a surge in Wall Street stocks after US inflation cooled more than expected. Easing inflation and weakening economic activity have fueled Federal Reserve rate cut bets as well. Shares in Australia, South Korea and mainland China climbed, while those in Hong Kong reopened with gains after a holiday. Japanese stocks mostly rose but pared earlier gains. Futures contracts for the S&P 500 and Nasdaq 100 also edged higher in Asia after both benchmarks rose more than 1% to touch fresh highs on Wednesday. The dollar index fell to a one-month low as the currency weakened against all its group of 10 peers. While consumer confidence remains stubbornly detached from the S&P 500 rally, top investment firms predict the rally in stocks to rage on. With the S&P 500 index setting all-time highs, BMO Capital Markets is predicting even more gains through the end of 2024. The Treasury market rallied as traders grew more confident the Fed will cut interest rates this year. They were emboldened by an ebb in US inflation and weaker than expected retail sales data. The surge pushed 10-year yields lower by as much as 10 basis points to the lowest in more than a month. As a result, the bond market reversed more than half of this month's brutal losses on Wednesday. Traders priced in more than 80% odds that US policymakers cut rates by a quarter point by September and about a 1 in 4 chance of a reduction in July. With rate cut bets back to the fore, gold rose to the highest in more than 3 weeks before paring some gains.